Let's show you the wonders of television. We're going to go to Cape Town, to Refiwe Madzina, who is going to talk to a guest in Johannesburg. Refiwe, good evening to you.
Good evening, Jeremy, and that's right. I'm going to be speaking to Neville Mandimika, who's a sub-Saharan economist at RNB, and we're speaking about the Where to Invest in Africa report that RNB published. And I'm always surprised when I see that South Africa is still on this particular list, given the woes that the country's economy has gone through. So, Neville, I'm hoping you can just break this down and make us understand. We are seeing that South Africa is falling lower on the rankings. So what's keeping it on the list?
Well, if we look at South Africa's financial markets, I mean, they're unrivaled considering, the likes of Egypt and the likes of Morocco, which are two steps, and obviously Egypt #1. So I think that still holds us in good stead. I mean, the issue of media and all of the free press that we have here is obviously very, very important for businesses that are considering to actually go into some of these economies. But as you mentioned, we are slipping down those rankings because at the end of the day, we're competing for the same dollar that Egypt and Morocco is also competing for. So the real question for us is South Africa growing at a fast enough rate in order to remain competitive? And our analysis shows that we are being found a bit wanting there.
And of course, it's not just about the capital markets. It's also about the legislative reforms. We have seen other countries, and I'll mention Ethiopia as well, which is also on the list, really make reforms that are attracting the right kind of investment from global investors.
Yeah, I think you've hit the nail on the head there. It's all about reforms. I mean, I'll go back to the likes of Egypt and circle back to Ethiopia. I mean, they're doing everything that they can possibly do from an ease of doing business perspective and also growing. I mean, if you look at that, that economy, Egypt, it is, bigger than South Africa, yet it is growing at 5 times the pace that South Africa is. So it shows us that we are really falling off the pace there.
But there are some positives. You've just mentioned the ease of doing business and, of course, South Africa's capital markets, banking institutions and the media, as you say. But, of course, that has to be coupled with some of the risks. What are those risks that South Africa faces and obviously could cause it to fall out of the top 10 at some stage?
Well, I mean, if you look at some of the structural headwinds that we're facing here, I mean, the issues of SAA, I mean, all of those things are topical. Eskom, electricity shortages, all of those things, tend to hamper manufacturing capacity and productivity of the nation, which is where obviously some economies like Ethiopia are doing relatively well in terms of trying to capture that manufacturing essence, which we are starting to lose here. So I think some of those risks that you've been flagging in this particular program and others before, I think really are coming to bear in terms of us falling down the rankings there.
And what about the growth potential then, Neville? Are we going to see an uptick at any point, given what we're seeing with Eskom, a slump in the mining and manufacturing sectors? Is there a silver lining at all for South Africa?
Well, if we look at what is happening from a global growth perspective, it seems like the health of the global economy is starting to pick up a bit. So hopefully our exports will start to benefit a little bit from there. But again, I think we can't understate some of the issues that we're facing domestically and how some of those things are hampering our own economic growth. I mean, we're talking about 2% at best in terms of economic growth, while the rest of the region is growing at a clip of anywhere between 3 to 4% over the next couple of years. So we are really below the par there.
So if we were to focus on growth areas, which would those be? Which ones are the key sectors that could unlock that growth potential for South Africa?
Well, I think our human capital is nothing to be sniffed at. I think there's a lot of stuff that we can do there in terms of, rejigging some of our educational sectors and some of the stuff that we're doing in terms of our own curricula to really boost the productivity. But these are multi-year horizon projects that we're looking at. In terms of the things that we can do in the short term, of course, we have to sell the right story. We have to speak the right things to international investors. But again, I'll underscore the point that we have to do it at a fast enough pace that makes us very competitive because, again, we are competing for the same dollar that everyone else is.
Unfortunately for South Africa, Neville, we never do anything at a fast enough pace. So it'll be interesting to see how those developments unfold in the medium to long term. That's Neville Mandimika, who is the sub-Saharan economist at RMB. With that, let's take a look at how your markets ended off the day. So the JSE on track to end the week off on a good note, given what's happening globally, the developments around the coronavirus treatment being found by a university in China, as well as China talking about taking away the tariffs on over 1,700 goods from the US. And that's, of course, some positive developments around the trade negotiations between China and the US. Taking a look at your commodities, gold back in the green today as investors look towards it as a safe haven asset. Meanwhile, the price of Brent crude is lower today. And this is, of course, those pronouncements around the development on the coronavirus, as well as what's been said by OPEC on supply and demand of the global markets. And then taking a look at the local unit, unfortunately, it remains in the red, not taking well the business confidence data that came out today, showing that business slumped because of the weaker currency. And it looks like it's a trend that's set to continue for the short term.